What's up, investors? It's your boy Mr. Roshu, aka the Cash Flow Investor. Welcome back to the channel, and if you're new, make sure you hit that like and subscribe button so you don't miss any of the new content. If you clicked on this video, it's because you want a bit more insight into my cash flow dividend strategy, specifically what types of returns we would hope to see. And I gotta say, if you're new or missed out, be sure to check out the breakdown and allocation video so you can see fully and understand why I'm in these investments. The link will be down in the description, and there should be a link coming up above. But with that being said, let's get down to how we will illustrate the results. This, of course, is not investment advice, and returns in the market are never guaranteed. So to start figuring out expected figures, we have to get averages of our stock's dividend yield, capital appreciation, dividend growth rate, and we're gonna assume that we're gonna be in the market for about 10 years, right? That's our time frame. So we need these averages specifically so we can use a dividend calculator to project our future returns. We will be using the bestdividendcalculator.com, and in this example, this is a free tool that you can use as many times as needed to help you on your financial journey. So one of the first things we'll need is the average dividend yield of SPY, SCHD, JEPQ, and XLK. These are the big four in my portfolio, and I have explained how I allocate into each one. These should produce roughly a 4.25% yield if I were to invest in each one equally. So to keep things simple, for this example, we're going to use that 2.5% yield, even though the average can be different depending on the allocation. The next thing we need to do is calculate the dividend growth rate. In this example, because of our timeline, we want to use at least a 5-year or 10-year dividend growth rate average and use that to calculate our expected dividend growth. This leads us to a 7.58% year-over-year rate, which is pretty cool. And last but not least, we also need our projected capital appreciation rate, which should be around 18.9%. And although that seems very high, you got to keep in mind that we're in the middle of a bull market. And so even though we're seeking cash flow, the S&P 500 and the ticker symbol XLK, which is our tech fund, they've been absolutely ripping. And so like that contributes to having this high capital appreciation rate. And then it also helps that SCHD and JEPQ have been growing at about 11%. So even though that number is pretty accurate, we're going to go with about 12% for this example. So now that we have our figures, we'll say that we're going to start with the $0 initial investment and commit to mustering up about $8,000 a year. We're going to go ahead and plug in 20 years. We're also going to say that we're going to have a 12% capital appreciation rate, a 7.5% dividend growth rate, and a 4.3% dividend yield. The reason that we're rounding up these numbers is because the calculator doesn't take into account these partial numbers. So this calculator specifically wants to see whole numbers. This calculator will also take into account that we will be investing every year and reinvesting dividends every year. So here we go. Looking at the data, we see that our first year invested. So looking at the data, we see that after our first year invested, we will already have a portfolio that pays out $240 and already has a portfolio value of $8,240. After 10 years of consistent investing, we now have a portfolio value worth $142,000 and annual dividend payments of $3,279. And this is where it really gets fun, because by the end of year 20, we now have amassed a total portfolio value of $648,000. We now are receiving dividend payments of $10,000 a year, or $9,975, and our investment has only been $160,000. Now, I feel like these returns are not too bad for only investing $160,000 in the market and just letting that sit there for 20 years. I think that, you know, mustering up $8,000 a year isn't necessarily a whole lot of money, but I know that it can be pretty difficult for some people. But if you can invest any type of money, I think that this example kind of shows you the power of compound interest, the usefulness of dividend yield, dividend growth rate, and capital appreciation. And when you combine all of those things together and you reinvest all of those profits back into the stock market, it can really produce some really nice gains. So I hope you see where I'm going with this. This combination of ETFs gives a great balance of growth and building that dividend income. Always keep in mind that the two are important, but you don't want to go chasing either, because chances are you can either end up in a yield trap or end up investing in a company that won't survive in the long run. And I think this might be one of the things that I want to talk about, is just kind of how to avoid either chasing yield or chasing growth, and the downfall of chasing either. Anyways, I do suggest that you always do your own research and investments, and keep on tinkering on in the calculator and find out what works best for you. Dividend calculator is linked down below in the description, so be sure to use it and find out what investment strategy works best. Anyways, I hope you got some value from this video. Like I said before, these 4 holdings are the key to my portfolio. It's your boy Mr. Roshu, aka the Cash Flow Investor, and I'll catch you on the next one. Peace.